All right. Welcome to week 3 of our day trading investing course. Gonna wait for a few more people to pop on here.
Yeah, what's up, everyone? It's I'm happy to be on. My name's Sean from We Are Investing.
Yes, so today we have Sean from We Are Investing. If you look here, Sean has his own YouTube channel. Really, really good stuff. Great stuff if you're into swing trading, long-term investing, kind of macroeconomics, knowing what's going on with trends, sector related. By trade, he's a civil engineer. So especially if there's any stocks around construction and building and all that, that's his home turf. That's his home field. And overall, just a real great guy. I've interacted with him in the past. When I started my YouTube channel and had like a zero, and was just starting out, he always gave good feedback and good comments. And, I really respect and appreciate all his help. And he's here with us today. So Sean, man, welcome along, man.
Yeah, thanks for having me, man. Like you said, we built a relationship over the last, I guess, like 2 years or so that
Mm-hmm.
we've been on this journey together. We're
Yes,
both
sir.
growing, we're both learning from each other, and that's what's about, building a community where we can bounce ideas off of each other. That's what we do.
Yes, sir. And in a little bit, Nar's running a little bit later. Nar will jump on, but we're going to start our slide presentation. And also at noon, 12 o'clock, we will have a CPA. And, just have your tax questions ready. So if you ever worried about day trading, if you think you should day trade with a S corp and or LLC, just anything, that's going to be the man to ask when he comes on. All right. All right. So today we're going to be discussing some technical analysis, and we're going to kind of go over Japanese candlesticks and a few other things. We're going to be touching on support, resistance, all the things that if you're a day trader or a swing trader, you're definitely going to need in your arsenal. You're going to have to understand technical analysis. It's pretty much mandatory for every day trader, swing trader. So what is technical analysis? It's basically the study of historical market data, including price and volume. The two most common types are technical analysis is chart pattern and indicators. So basically, right, what we do is we go with history, right? Where if we're looking at a stock and it's bounced off a certain area, historically, let's say 2 or 3 times, let's say we're looking at a company that historically, whenever it dropped to $200, it kind of like bounced off of that and it went back up. We'll look at those historical pivots and we'll set like a support line or something and say, okay, it may pop here. This may act as support. This may be an area of interest where you may want to look to buy the stock. That's kind of one aspect of technical analysis. And when they talk about indicators, so one thing with indicators, understand some of them are lagging, right? So even like if you're just like a MACD trader, statistically, you have about a 40% chance of being successful if you just trade the MACD, and that's just kind of like test done like back testing and all that. So you have to for me, the way I trade, I combine static and dynamic indicators, like different indicators, but I also look at volume, I look at level 2, I look at candlestick formation, and kind of like I like to have like a confluence of different things telling me that this stock is a strong interest right now. What about you, Sean? What's your strategy when you're looking at a stock? You want to look at a swing trade and you want to use some technical analysis. What's some of the strategies that you like to do?
Yeah, so you pretty much hit the nail on the head. So you have to rely on more than just one indicator. So what I like to do, it depends on what I'm doing. Even for my long-term investments, I'm using technical analysis to try to identify a good entry point to dollar cost average in. So I like to look at support resistance. I like to look at RSI. I like to look at MACD. And I also like to look at some of the major moving averages because I'm more of a long-term swing trader or a long-term investor. I'm looking at the 200-day, the 150-day moving averages, things like that. And I'm typically looking at the 200-day EMA as a major support.
Yeah, and one thing I was talking with another group just yesterday, a Facebook group. They do investing and stuff, and we were talking about the 200 EMA and different EMAs. And I wanted to point out something that's very important when you're looking at EMA and you're going to use it as a point of support. also use the overall market too, sentiment, right? So if overall the whole market is crashing, the likelihood of that 200 EMA holding might drop a little bit, right? You may have to adjust. Like if the overall market is down 10% because of what's going on in Ukraine, because of high interest rate, because of the inflation, because of whatever reasons, you may want to keep that in mind and say, okay, maybe this 200 EMA won't hold. Give yourself a little bit of room and kind of like look at the price action also.
Yeah, on top of that, when the market is bearish and it breaks the 200-day EMA, that 200-day EMA then acts as a resistance too. So,
Yeah,
and at the end of the day, it's just one indicator, one data point, if you want to say that. So you have to use more than just one thing.
absolutely. So we're going to talk about some candlestick patterns, and the history of the Japanese candlestick comes from Mr. Homa. He's considered the father of the Japanese candlestick, and he kind of like coined the concept of candlestick pattern. Today, we all know it as Japanese candlestick. His strategy for him allowed to understand what the overall psychology was in the market. So they used to have like an area, a market where they traded and they would buy and sell trade goods. And he understood that there was a psychology to the market, like prices would go up, for example, if there was a fear of shortages. And he kind of like recognizes. So he kind of created this candlestick type of mentality. So when we look at a candlestick, right, sometimes you see a green one and sometimes you see a red one. So here, this point here is where the candle actually opens, right? So let's say this is $3, and let's say this area up here is 350. This is where the candle closed, right? At some point though, this candle dropped down here, and then it quickly got bought back up, right? And then it got bought up and went all the way up here, let's say 375, and then it got sold a little bit and eventually closed here at 350. So what this tells you, it tells you that, hey, maybe this this ticker is still bullish. It looks like people are buying it. This could be an indicator that if you have a few of these, it's a bullish sentiment. And if that can add to your thesis, right? If you're looking at a trend already, if you're looking at some support, if you're looking at different things and you see a few green candles, that's part of the kind of like building up a thesis for yourself. And on the opposite, this stock here opened up at 350, right? It went up high, but it got sold off really quickly. It got all the way down, let's say, to $3, and then it closed at 325. So what does it mean when it opens and closes? These candles can represent 1 minute. They can represent 5 minutes. They can represent 10 minutes. They can represent the whole day. They can represent the whole month. It just depends how you set it up on your platform, right? So, but let's say this was a 1 minute candle. In 1 minute, it opened up here, dropped, got bought back up, spiked up all the way up here, and then eventually closed at the minute right here. And Sean, do you kind of look at candlesticks for your trading? Anything to see maybe like if there's an engulfing type thing, or is there any strategy you have for looking at candlesticks?
Yeah, so I look at candlesticks. I'm not looking at lines. I don't understand how people can trade by looking just at lines,
Yeah,
because the candlestick, seeing where volume is and looking at the wicks and stuff like that will help you identify the proper entry or sell price. So I use it. I'm not really a day trader, so I'm not looking for engulfing candles or anything like that, or bullish
yeah,
hammers. But I know enough to recognize one, and I might use that to my advantage. But that's not really what I'm focused on.
yeah. So this is like what you may see on some people's charts. You see like just basic candlesticks. These will be like EMAs, moving averages. And this is kind of like the most common one that you'll see here. So you'll see like a big red candle. There was a big sell-off. It opened up here, closed all the way down here. Then the next day it got bought back up. And for some traders, like if they have like this, for example, you have a red candle here. It's kind of like this hammer, right? You see this line. I'm sorry, this line here. This is kind of like, for some people, this will be like a bullish kind of indicator. It's a thin line and a small body. So that means that this stock dropped down here and it quickly got bought up here. And then the space between the opening and the closing is really short. So it's trying to tell you maybe people are starting to buy it now. And then you get confirmation the next day where you have a larger green candle, larger than the day before. And for some people, they'll use this as an entry point. I may look at it, but it's going to be in combination if I'm day trading with other things, other indicators to tell me that, yes, this is a confirmation.
Yeah, if I can add something real quick.
Oh, absolutely.
The important thing with candles is seeing where the volume is. So in that red candle, you see all the volumes up at the top. So that's indicating that a lot of the activity is happening at the higher price. So that low wick with low volume is a bullish sign. And then the
Yeah.
next candle with the green, you see how the volume is much higher at a higher price. So that's a good sign right there. So when you look at candles, it's good to look at them because you can see like kind of at what price the market is bullish or bearish on a stock.
Yeah. And remember, we're talking about trading, we're talking about swing trading. If you're a long-term investor, you really don't care much about this, right? If you're just
Yeah.
holding a stock and you believe in the stock, like let's say Disney, and you're like, you know what, I'm just going to hold Disney, Apple, Microsoft for the next 10, 20, 30 years, this really is, it's not going to apply to you. So here's just like kind of like a more visual picture of what's happening. We have here the open, and then the stock, there's some selling pressure, and then there's buying back up, and it buys, and it closes all the way up here. And but at every one of these points, there's prices, right? Like this could be $10, this could be $9.50 or whatever. So it's just telling you that it's opening up here, let's say at $10. It's got sold off a little bit, then it hit down here, and then a lot of buyers started coming in. They bought in, and they brought the price up all the way up here, right?
Mm-hmm.
So this is just kind of like letting you know how, well, just a basic introduction to candlesticks. So these are some kind of like indicators that may show you that a swing trade or a day trade is becoming bullish or bearish. I don't, dig too deep into this either. I mean, I like to see some bearish, I like to see some bullish indicators if I'm going to day trade and it's already confirming some of the other stuff. But like if you see something like this full, they consider it mostly bullish. And then this is the second most bullish because the price dropped down here and it quickly got bought up. And then you see here, this, the volume's at the top of this. This is like normal bullish where, it's like it got bought up here and then closed up here, but it's a bigger gap. It's not as bullish as these two. And this is what they consider like a neutral bullish because here it's like less volume. It's in the middle. It doesn't seem like everybody's decided where the trend is going to be. And this is the least bullish, even though it's a green candle and it closed higher than it opened. All the volume is at the bottom of the candle. So maybe, the stock is losing momentum, or maybe people are going to start taking profit soon. And then the same is true for the bearish. So if you're someone that wants to buy puts, you can look at this to see how bearish or how bearish your position is, and these candlesticks may help you. And yes, there is a link for the PowerPoint. Let's see. So a doji is named for a session in which the candlestick for a security has an open and close that is virtually equal and are often components in patterns. Doji candlesticks look like a cross, inverted cross, or plug-in. And some people use doji candles to indicate reversal points, right? So they'll see like a stock's been dropping, and then there might be like this type of doji candle, and then a big green candle, and then other indicators, and that'll help to their thesis to say that, okay, this is a stock that's starting to reverse. And here's an example here. So a gravestone doji, and don't really worry about, memorizing all these names and all that. It's really kind of like, this is what's the most important thing, right? So first you see this black line, right? This is a trend line. And basically, if you're day trading or even swing trading and you see over time, right, this stock kind of holds this trend, right? And you're saying, you know what, I want to jump in to short this stock. Or you're already in the stock and you want to just take profit until, it starts to reverse. And then that's when you're going to start to take profit. So either way, you want to know when the reverse starts. So you see it's holding this black line. It's holding this trend. It's kind of like you see this doji, it breaks below it, but it quickly goes back up. So it's bullish, bullish, bullish. Then you have this gravestone doji, right? where it spiked up and super quickly sold right back off. And look at this little line here. The line between buying and selling is super small. People are maybe starting to reverse. If you see this, it doesn't mean 100% that it's going to reverse, but just know it may be a reversal sign, and you can use other confirmation to just say, yes, this is my thesis was that it's going to reverse. The next candle, look, it's a big red candle. It looks extremely bearish, and then it broke this trend, like it broke this support line, this support trend line. You see it broke below it. So at this point, you may want to get out of your position, because you see here the next day it was green, red again, and then the stock continued to climb down.
Yo, so let's say you're in a stock, right? And you're riding this uptrend on it. So you're sitting on some profits. So let's just say these are day candles. At what point are you selling?
So for me, if I'm day trading or swing trading?
Well, you're swing trading. Let's say each candle represents a day, and you've been on it since the beginning of the trend. So you're sitting on some nice gains up there, and trend broke. When are you selling this swing trade?
So hold on, let me add my boy here. Hey, Nar, Malik.
What up, brother? How are you? Sorry about that.
What
I was
up?
just trying to figure out how to get on this. It was just giving me problems. How you doing?
Good. I got my man Sean from We Are Investing. Sean, got Malik here. Malik's a great day trader. Sean is a civil engineer by trade, has a great YouTube channel, great knowledgeable guy for overall market stuff, swing sentiment, long term, and a great YouTube channel, man. High energy. Love.
Yeah, what's up, man? It's a
Nice
pleasure to meet you. Yeah,
Pleasure to meet you.
same.
All right, so that was a great question. So for me, I like to, what my biggest indicators are what I call like a confluence, right? So if I'm riding the trend, if up here, right, there's already a resistance, right? I may have like a monthly resistance or a weekly resistance or a yearly resistance or a daily resistance. If it's going to come close to one of those resistance lines, right, and I see it starting to test that resistance, then I see that on the stochastic or the RSI, it's starting to come down. It's a little bit of downtrend on those two indicators. Then I see it break this trend along with this. I may close my position at that point.
Yeah.
But I usually though, whenever I get into a trade, I already have an area where I'm going to start taking profit.
Yeah,
So
I hear you.
yeah. So gravestones most bearish if it's red and least bullish. Yes. Yeah, exactly. But like I said, like Ali, you have to use it with other indicators. Like traders will fail if they just depend on kind of like one thing. So like some of these, like especially some of the indicators that are kind of like lagging a little bit. So this is just kind of like building to your thesis. If you see like a strong resistance area, let's say right here, there's a strong resistance area already. And like in the past, every time it's tapped that area, it's reversed. Let's say it's coming upon that. And then you see this candle along with that old resistance. Then you're like, okay, you know what? Let me take some profit and get out of here. It can just kind of help you take some profit before you start losing some of the profit in the swing trading and day trading.
Yeah, you're never hurt by taking profits. So
no, absolutely.
So if it gets to your resistance and it's there, it's a good thing to take profits. I would probably, so let's say there wasn't a resistance there. If you go back a slide,
yeah,
like just going off of the trend and the candlesticks, looking at so right after number 4 or 5, where you have that big red candle, the next day you have a green candle, but the volume is less. The majority of the volume's at a price that is below the open of the prior candle. So then that would be a good indicator that, hey, this thing's about to move down. Let's get out. Trend's broken. So I guess candle number 6.
Okay, and then would you take full profit at this point, like, or you probably take partial, or?
Well, it all depends on what the goal is, but if you're close to resistance, yeah, I would take full profit. If you're looking to ride this swing for a couple weeks and you're towards the end of your price point, definitely. It all depends, you know what I mean?
Yeah.
Because you could just say, all right, well, this thing continues. There might be, if you zoom out, there might be another trend where you're riding the channel and you went up and down. And now that point, the last candle is the bottom of that channel and you're going to continue on up. So it really depends what you're looking at.
Yeah, I have been in that position many times where it drops the short-term support, but there's a longer-term support right there. and the stock could start rising up, finding more buyers who are able to push it above those sellers.
Exactly.
Yeah. So here's another example. You have like a dragonfly doji, and you see here the body is at the top instead of the bottom. So it may be telling you that, okay, there's a reversal to the upside coming, and then you have kind of like another confirmation, and then the uptrend begins for after that. So yeah, so sometimes when you see the body all the way at the top, plus confirmation with another candle, and maybe it's bouncing off support, those are things that may help you get into a stock if that's what you're interested in. So spinning top is a candlestick pattern with a short body that's that's in the center, and it has a long upper and lower shadow. And this is kind of represents what they call indecision sometimes about the future direction. So this may also be like switching, but everybody's kind of like the bulls or the bears. They're not in control, right? So here, right, like if I saw this and I saw this kind of like flag forming, and then here it's like neutral, I wouldn't get in here. I would wait for this confirmation right here. So it broke this little resistance. This candle broke this little resistance. And I would say, okay, it may be on an uptrend because it looks like kind of like a flag pattern. So you may have here a bull flag, but there was some indecision in these last few candles. So this is, for me, it's not a good entry, right? I'm not going to enter in this indecisive candle, but I'll enter here in this big green candle that confirms, you know what, it may be on an uptrend. It broke these areas, and this may be an entry for me if I
Yeah,
see
dude,
this.
that's like an excellent point, because when you're trading off of these patterns here, right? To me, the biggest thing was a pattern is just indicating that there's going to be a move coming. It could be a bearish move or a bullish move. I don't care if it's a bull flag or a bear flag. It's usually, for me, just a sign that a move is coming. So you just want to wait for confirmation. And that's exactly what you're saying.
Yeah.
Like
Oh, go ahead. Go ahead.
if you get in before, so this thing could just, instead of it breaking out, it could break down, and then you're like SOL, you know.
Yeah, no, for real. And that's the point I want to hit on. Like, people think that maybe day trading is easy and swing trading is easy because if you watch every info YouTube commercial, you know, everybody's a billionaire on YouTube, but it's not. You know, this is where, like, when they talk about 80 to 90% of day traders fail, they fail because they don't have patience. They don't wait for confirmation. They jump in here, right? So somebody might say, "Oh no, this is going down. Look at this bearish indicator." They jump in, and then all of a sudden it spikes up, or they jump in and they're like, "Oh, this is this. I want to get in early, right? I just want to get in 20 cents early before everybody." And they jump in without confirmation, and then it crashes 40 to 50%. I've talked to so many day traders that used to be on big rooms like the Warriors and just big rooms, and this is like one of the biggest mistakes that I found, that they're very impatient and they don't wait for confirmation and all. You know, it just helps. You have to build a thesis, and you have to like get that confirmation and then jump in. So you see sometimes these long candles, and they just show basically that there's a lot of price movement, there's a lot of emotions, there's no wicks, just buying and gets sold up. So bullish harami, a bullish harami is a candlestick pattern that indicates the bottom when it proceeds by a fall. It is two candles, bullish reversal pattern. The first candle has a relatively large body, a red body, it's bearish, and the second one has a smaller white body or green, and that's bullish. That's contained in the body within the body of the first candle. This is also known as an insider day pattern. So here, for example, you have a downtrend and you have a big candle, big red candle, and inside harami, I think in Japanese it means like birth or something, right? I think it's something like that. So that's why they got that from the Japanese. It's like this candle, this green candle is within this one, and it could indicate, I mean, along with other things, if it's bouncing off support and other things, it may be reversing. And the same is true for if there's an uptrend and then you see what this bearish harami, because you have a red bearish candle within this green candle, it may indicate that there may be a reversal. And this is just things you want to add to yourself, you know, to your trading, to just make your case to become more successful. And here you have some examples where you have this big red candle. Inside you have this green candle or empty candle, which is green. And then the reverse trend started. Right. And then here again, like you have a green candle, smaller red. And right after that, it crashed not too long after. Okay, bullish engulfing. To me, this is one of the more popular kind of like indicator in the candlestick kind of world for people that are like strict candlestick traders that use it all the time. This is one of the most popular ones. And this is the one that I've seen really that has the most success. If you combine it with like, look at all this volume coming in on these days, there's extra volume. For me, like if I'm looking at this, I'm going to build a trend line right here like this. And if I'm going to get in, I want this trend to be broken. I like to see this. So this is like you have a bullish engulfing pattern is a candlestick pattern that occurs when a negative candle with a relatively small body, which is this one, this relatively small body, is followed by a positive candle with a large body. It's important that the body of the second candle is fully formed, like you see this big full body, and it's larger than the one before it, right? So why is this good, especially for a new day trader? So if I see this candle, you can use the bottom of this candle as your stop loss, right? So it's important to always have a stop loss, have a, profit target, something. You just don't want to be holding the bag, and you're going to be holding the bag if you're a new trader. So you see this big candle and you say, okay, this is going to reverse. And I see this trend here. I'm going to jump in here, right? I jump in here because it broke this trend. The day before, it had a bullish engulfing, but you got in here at 16 and then it dropped $2. You should be able to hold it. Your exit should be the exit down here, right? Because you see here, it reversed and you would have made money if you would have just held on. Is that, you guys ever use bullish engulfing candles?
Yeah, I have.
Bullish?
Just to like, go ahead. Now, go ahead, Malik.
So yeah, I do, and why I use it mostly is because one, it shows me a strong reversal, right? It shows me that buyers came and stepped in at that level, right? And if you use a previous level where the stock was at that level, you could see buyers came in before, so you could tell it's a strong support. So I wouldn't normally enter right off the bullish engulfing. I'd wait to see how price moves, right? I'd want price to come and retest any close that's within those red candles, the two red candles before that. So as you can see, the stock wanted to come down and test those levels. When you see it test those levels and buyers step in, now you have a sort of uptrend line, and you know where buyers would normally step in on this uptrend, and that's where you can take your position. So yeah, this is actually one of my favorites because it's so strong.
Your favorite. So so do you kind of like wait for this trend to break along with the candle? And you said some volume. Do you use any other indicators to help you confirm?
I use several confirmations, right? So a confirmation for me, one would exactly, you see the downtrend line, I would use the resistance of the downtrend line. So like if your line that says downtrend, let's say we moved it to the right side, right? And you see that downtrend. So what I would want is a bounce. I would want a break of a previous support level. So we could see the previous support level being you see the top of the big green highlight you put, that is a resistance level, a support level. I don't know if I could show you my screen.
Yeah, you can. I can have you show your screen.
The bullish engulfing reversal pattern where it shows the green shadow you have on the top of that shadow would be my confirmation, right? It shows me that price reversed. So then my confirmation would be one, the reversal of the bullish engulfing. Two, the bounce after the bullish engulfing on that white candle. That's another one. Three, I want the next candle to close above the bullish engulfing's high. When I see that, I could see that the support level that was able to push it up there, the buyers are there again. And that's
so you would get in on this candle here?
Exactly.
When it breaks this high. Okay, I see.
Yeah,
that's good.
That's waiting for super confirmation. If you want to wait until you're sure, if you want to be in early, that's fine. But like you said about the spinning top, you never know because it has volume, it's moving, but it's also indecisive. All right.
Yeah.
That bullish engulfing could just be shorts being bought back. You want to make sure that there's shorts being bought back and it's still being pushed. Or if it's not shorts, someone's actually had a limit order with millions of shares at that level or something.
Yeah, big
Excellent.
block order.
Good information. Excellent.
Yeah, that was good.
So again, we talked about a bullish engulfing. There's also bearish engulfing, right? You have an uptrend, you have a skinny body here, 2 long wicks. Then the next red candle, it's bigger than this one. It engulfs the one before it. It may indicate here, just like here, you had a small body, big candle. And, here, like actually here we have the entry point. And I think this is more in line, kind of like what Malik was saying, right? He didn't buy here at this candle. He looked at this. This is kind of adding to his confirmation. And then maybe he sees this and he might enter here because it had all the other confirmations that this is reversing and downtrending. And your stop loss could obviously be the high of this candle if that's what you're interested in there.
Yeah, exactly.
So the bullish hammer you see sometimes here is a type of maybe another sign of reversal here. It's basically you've been having this downtrend. And this downtrend went all the way down here. But as soon as it went up here, it got bought up very quickly. That's why you see this long wick. It got bought up very quickly. And then the body here, it's closing at a higher part of this candle here. So sometimes this may also be another sign. This hammer stick may be another sign where stocks are reversing. And you're definitely going to want to use it with confirmation of what Sean was saying, what Malik was saying, different things that show that prove your thesis is correct. Shooting star candlestick is a formation is viewed as a bearish reversal pattern that typically occurs at the top. And again, these aren't the end all. If you just try to look at these things, you're going to get confused and you may enter too early. But just like know these, when you see a trend and you're trying to either take profit or get out, and you notice like a big shooting star, or you notice like an engulfing pattern, you may want to kind of like look more and look where the resistance is, look what the moving average is to see if this is where you want to take profit or get out or whatever.
Yeah, like the candle right before number 1, you might have also thought that was a shooting star.
Exactly. Exactly.
So,
yeah, and it still went on an uptrend.
Yeah.
And he's just another example. Morningstar is a reversal pattern to the upside that can be found at the end of a downtrend. The first candlestick is bearish. Second candlestick has a small body or doji. And the third body is bullish. So you see here, this is a big bearish candle. Then the second one is that doji, the possible reversal, where we said when we see this, it may indicate a reversal. And then the third one is confirmation that, okay, this is bullish. And, maybe the trend is going to change. But look, if you would have gotten in here, you still, would have been down here. And it's not end all confirmation, right? Like if I see this and I see it stop here, what I'm looking at too is, look, it didn't break this trend yet because this trend is here. So you may want to wait till the trend is broken and have other confirmations. Morning and evening star also reversal. You see here, the first candlestick is bullish. And this is the opposite of the other one. Second one is a doji. Third is bearish. And then the trend reverses to the downside. So chart times and frames. We were talking about daily candles. We were talking about minute candles. And what that means is each of these bars are going to represent some time frame, whatever time frame you set, right? So if you want to look at an intraday chart, right? I'm going to pull up a chart here. So let's say I'm looking at IBM. Let's say IBM.
Call with the boomer stocks.
Hey, IBM. I'm doing research. I think they may come back. They may come back.
Oh, look at this thing, dude. I got smacked by Roku.
Okay. Yeah.
Roku is never seeing its high, at least for the next 5 years, bro.
Okay.
Real.
So look at Roku right now. Right now, you see here, it says M. Each of these candles is a month of action before the next candle formed, right? So this is a whole month. And then this candle, after 30 days, this candle formed. Then this is a month. If that's too long of a time frame and you say, okay, I want to see what it's doing on the daily. So this is each of these candles are daily, right? So this one candle represents a whole day of trading, what it did in that day. So on this day here, December 1st, it opened up at 230.88. Then let me see. Okay, here. So on this day here, it opened up at 224. This is where the candle opened up on that day. Let's say at 9:30 Eastern time, right? It opened up here at 230, 33, 44, 34. Then during the day, it dropped as low as 204. So it dropped 30 points. And then it got bought back up a little bit and it closed at 4:30 Eastern at 208. So this is the whole action in one day. And you'll look at the daily chart if you're going to swing trade, because you're going to want to see like trends. You're going to want to see points of support, points of resistance. Now, if you're intraday trading, some people use the 10-minute, some people use the 5-minute. If you pick the 5-minute, oh, yeah. Okay, so if you pick the 5-minute, that means this candle here opened up at 8:30 and it closed at 8:35. Then the next candle formed at 8:35 and it closed at 8:40. It's telling you all the price action that happened within 5 minutes in that candle. And then some traders use the 1-minute candle to have like a more precise entry. And this is going to be important for day traders. They want to, for us, 20 cents is a big difference, right? If you're long-term investing and you get in 20 cents early, I mean, that nobody cares because you're holding it for 10 years. But for a day trader, if you get in, let's say right here at 133.92 and you close at 138, you're going to be super happy, right? You just made $5. So each of these candles represent the minute. This is the minute candle.
Yo, what do you use to trade? You use TradingView for your charts, and then you use what brokerage are you using?
I use TradingView. I use Lightspeed. I use also WhatsApp, and I also have TD Ameritrade. I have Thinkorswim.
Okay.
TD Ameritrade, Thinkorswim, more for longer. Webull, I use it more for like certain options that I'm going to swing. And Lightspeed is a broker in New York. Really fast executions. You have to be above the PDT rule for that one, and I like Lightspeed.
I gotta try that. Did they show you like fills level 2?
Oh yeah. No, Lightspeed is the truth, man. It's super fast.
I need to use that because
Yeah,
I use
and then-
Thinkorswim, not to trade though, to chart and to kind of read information, level 2, things like that. But I heard international brokers is really good on that. I mean, interactive brokers.
Interactive brokers is also competitive. It's also really good.
Yeah, they reached out to me like asking if I could like partner with them, but I really just use like Thinkorswim, TD Ameritrade. But I gotta check it out.
I was sponsored by Webull at one point, and I stopped putting them in my YouTube videos, and they were like, "All right, we're not sponsoring you anymore." I was like, "Okay."
Yeah,
Right.
it's just like, Webull's fine. It's good. It's especially for beginners. There's so much on the app. Like, it's a big step up from Robinhood, but Thinkorswim is just, once you learn it, it's
They sell your information. That's what I don't like. They sell it to these market makers who can literally see when you put your stop loss. They'll go and drop the stock to your stop loss and then pump it.
Yeah.
I hate when they do that.
Payment for order flow. Thinkorswim does that too. TD Ameritrade does that too. Just not to the same extent.
Exactly, yeah. Because commission fees.
Yeah. So this is a kind of a better visual that shows you what I mean when you have like a 5-minute versus 1-minute candle, right? So we can see here, right? These let's say these 5 candles, right? This is 1, 2, 3, 4, 5. These 5 candles are represented in this one 5-minute candle. So this is 5 1-minute candles. You see it had this trend here like this. You see each minute candle opens and closes after every minute. But in this one, you see all this action in just it represented in one candle because this is a 5-minute candle. So imagine now like the whole day from 8:30, 9:30 to 4, all those candles are represented in one candle in the daily. So that's just kind of like a more visual idea of what we're talking about when we talk about time frames. Does IB
the payment for order flow? I don't know. I look it up right now.
I don't think so, because they charge just like Interactive Broker, just like Lightspeed. You have to pay commission, so they make their money off commission.
Per trade for stocks?
Yeah.
Okay.
Yeah, Interactive Broker, and Lightspeed, you have to pay like 0.0004 or something per every, I think, 1,000 shares that you buy or whatever. It comes out to
That's
like,
like
if you buy
nothing.
like, yeah, if you come out to like 1,000, if you buy like 1,000 shares, they'll charge you like $4 or something like that, or 10,000. I think it's $4. I don't remember what it is. I have a.
The problem is, like, there's so many brokers doing payment for order flow. It doesn't matter if you're using one that doesn't do it. They're still getting enough data. So,
Yeah.
but yeah, I hate sending my money to Citadel, or what's the other one? There's two major market makers. Citadel is the one.
I know Citadel, the main one.
Uh,
I don't remember the other one.
it's everybody gets Citadel confused with, there's like two Citadels. There's the Securities LLC and the Citadel LLC. One's a hedge fund, one's the market maker.
All right, yeah. I don't know if you find it. Let me know.
Yeah. I'll look up the payment for order flow and the Citadel thing.
Okay, we'll start this slide. I don't know if we'll finish it because I got snapback coming on in a little bit. And let me send them the link just in case it pops up.
I can't hear anything. Can you hear me?
Yeah.
Yeah. Okay. Okay. So this is for day traders, swing traders. This is extremely important. The next few slides: swing trading. Trend lines, support, resistance. It's pretty much any day trader you ever talk to or meet. They're all, or swing trader. They're always going to count on support, resistance. All that is extremely important. Are we able to catch other videos like this on demand? Yeah, so all the videos are on my YouTube channel. You can find like week 1, week 2, and we're gonna have a lot more guests, and we're gonna touch on other subjects like NFTs. We're gonna talk about options in different videos. Okay, so trend line here. We have this. Trend lines are also known as bounding lines, and there are lines drawn on the stock. There's lines around stock price tend to show the movement, the trend. So we have, for example, this is a perfect example.
I got your answer on the Citadel thing. So,
what is it?
So Citadel executes around 47 of all retail trades, and then Virtue Financial executes around 25 to 30. And
I
then
didn't
the
even.
rest,
I would have never even guessed the second one.
yeah. So
Virtue.
Virtue is a big one, and then there's other ones, and the New York Stock Exchange, the Nasdaq might fill some orders as well. But a lot of them go to Citadel and Virtue. You're talking about more than 75%, close to 80%.
So you see here, right? If you're like in this stock and you're like, you know what, I'm gonna ride the trend. You see here, it touched here on this trend and it continued up movement. You saw here, it kind of dropped below it, but it went back above. And then here, here it broke below it and then it stayed below it. Now this trend is probably going to become resistance. So this is an area where you might want to, take profit for it. That's why we look at support. Support is extremely important for day traders and swing traders. So here we have some more examples, right? It's on an uptrend. You see it bouncing, 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 bouncing. And then here it broke below it and it broke way below it. And even though here it kind of like reversed back up here, it may just like tap this trend line area and then just continue back down. So a lot of times supports or trends, once they reverse, when they were support, they become resistance a lot of times. And that's how you know for sure that the trend has changed. Right?
Yeah. And then also taking a look at that chart. So prior resistance becomes future support. If you look at your December timeline, go back a little bit, December, go up to that top, then go straight to the right. You can see that became a support there and
excellent
right
point.
there. So, what's it called? prior resistance convert over to future support and vice versa.
Yeah, excellent. And that'll be more visual once we draw support and resistance lines. So he's talking about right here. It tapped this and it wasn't able to break it because it's resistance and it fell down. But then this time it went up, it passed it, it tapped the same area it wasn't able to break before, but it bounced off that area and it became support. So that's a lot of times understanding what resistance is, because once it breaks it, a lot of times it becomes support, and that may be another opportunity where you can jump in and get some profit.
Yeah, the buyers become sellers and sellers become buyers.
Yes, sir.
Yeah.
Sometimes some people have trouble drawing these lines because there's so many wicks. For me, you know, I like to hit points where at least it got hit 2 or 3 times, and then you can draw it. Some people draw multiple lines and they'll have, like, instead of like trends, they'll have like what they call zones. So there's some traders that like to do that. Well, they'll hit multiple points and they'll consider these areas sell zones.
Yeah. Hey, so the brokers that use payment for order flow, Robinhood, of course, E-Trade, Ally Financial, Webull, TradeStation, Vanguard, Charles Schwab, TD Ameritrade, and Interactive Brokers does not.
Okay. Hey, Sean, that's a question from your community.
Oh, I don't know. I don't have my charting up. I'll get back to him on the Discord.
Oh, for XMI?
Yeah.
We'll use XMI then as an example once we kind of do it then. All right, let's see. So let's do XMI then.
This thing went public not too long ago, it looks like.
Oh, it's new?
I don't know. Just your candles didn't go back that far. Or were you looking at the month?
Yeah. Shoot, I can't even kind of lost up in it. Oh, here we go. I'll just do the daily then for now. Oh. So yeah, so if I would see this, I'll automatically obviously put a trend right here, right? I mean, a resistance area here, because it tapped it 3 times. Then it bounced off down here. And it tapped this area a bunch of times.
Is that drop from the pandemic? It looks just like all the pandemic drops.
Yeah, this is pandemic.
Okay.
I think 20. And then I'll use the week here also to get some trends. So it tapped here, but this time I'll use white for W for week. And then here it tapped a bunch of times, right? So I know if it ever bounces back down here, this might be a week, like a weekly pivot point, like on the weekly view. And then down here. And then I also do monthly. So I'll look for like some monthly pivot points. And it tapped down here a couple times. Here. And I'll change it to kind of like a maroon, reddish type thing to remind me that this is the monthly pivot point. M for maroon or moron that needs colors to remember.
Hey, I like that style though. I might start using that.
Yeah.
What do you use for the daily for D?
Green, because green is go. I couldn't think of no other color. Oh, here, sorry. So here we have all right, so let's say I was looking at a trend. I was in this I would do a lower trend maybe, and also like this up here, kind of like a channel. Okay, so now if I go to the daily, got some more information here. So look how it interacted here, bounce. Look at it sits in this imperfect channel, right? So if I'm looking at this, right, I want to see it come down here in this area. If it comes down here, like I can set right now like an alert, right? Like on this line here, or even the monthly pivot here, I can set an alert so that when it taps here, right? I'm going to get an alert here at 2,565 here. This is a monthly pivot point. So this is a strong reversal. Usually weekly though, like you know why? So you know why I color them, not because you know, like I'm special needs, but I color them because some stocks, right, like Tesla, for example, it reacts a lot stronger to the weekly pivot points than the monthly and the daily. So some stocks, like for some reason, like you'll notice, like when you go back, you'll say, okay, look how many times this one bounces off the daily. Look at here, like how many times it hit the monthly, it broke it. Then it kind of here, it tested the monthly, dropped below it, and quickly got bought back up. So you see this one reacts pretty well against the monthly, right? So if I ever have an opportunity like this area here, if it bounces, like to me, if it comes down here to this area, I'm going to say, you know what? This is going to be a very strong area of support. You got the monthly, you got the purple trend line that shows the uptrend. So there's two, this is like an area of confluence. I'm going to look at the stochastic. I'm going to look at the RSI. I may look at the MACD. So if the stochastic is on an uptrend right here, and the RSI is on an uptrend, and it's testing the monthly, and it's also testing a support point, bro, this is, to me, this area right here would be an A++ trade for sure all day. Like, because if it doesn't break, if it doesn't hold the monthly, I'm out. You know, I know where my exit is. My exit, you know, I'm going to lose a minimal amount of money if it tests this area here. But for me, the likelihood, it's so much in my favor, where it's like you have a 70 to 80% chance of success if it bounces in this area, because you have the monthly, you have the trend that it's testing, and then you have more confirmation with stochastic and the RSI. And I might use, you know, like I might add the chandeliers. It's called the chandelier exit. It tells you also when reverses are changing. So if I get a confirmation from that, I may look at a moving average, and if I say, okay, it's bouncing off of one of the moving averages, I'm going to just look at all those points, and this area would be a definite buy zone all day if it tests down this area. And that's how I would set like a support line. Hold on one second to me. I was just answering the accountant dude. So yeah, so that's for me, XMI right now, like if I was looking at this, I wouldn't buy it right now because it's okay. It tested this daily 3 times. So I don't know for sure. I don't have 100% confirmation. I don't feel like really comfortable knowing where the trend is right now. Right. I'm looking here though at the stochastic, and on the stochastic RSI, it seems to be on an uptrend according to these two. It seems to have it may have bounced off this, and you know, I would have missed my best entry, which would have been right here, 2944, because it bounced off the daily. I might check this, and okay, I didn't get a confirmation buy from this either. So I say, okay, so it's not enough yeses in my book. Like when I'm gonna spend my money and get in a trade, I want multiple yeses. Okay, is it bouncing off of previous support? Yeah, this is a day trade. This is a daily. Stochastic, yes, it's on an uptrend on the stochastic and the RSI. Am I getting a confirmation buy from this? No, not yet. So that's a no. It's testing this moving average here, which is this. So it's below this 200 moving average. So that's the definite, like I'm not getting in this yet. I don't have enough confirmations. It's just, you see here, it tapped this 200 moving average, and it had like that candle. Look at the candle. We were just talking about these candles. Look, it tapped this moving average perfectly, and then look where all the buyers went. They're all the way down here now after it tapped this. So they kind of sold right here. Like they saw this. So this may be going back down. You know, we don't, the thing is, I don't know yet. I don't have full conviction because I see this candlestick. I don't like it. Number one, I don't like that it tested the 200 moving average, and then it closed down here. I don't like that. So it's not enough yeses. I like, it may go up, it may go down, but I don't have enough confidence in either direction. So I wouldn't get in this trade right now if I was going to swing it. Now, if it's long term, I don't know much about the stock, but
it's an ETF.
Oh,
I don't know much about it either.
Okay, yeah. So I don't know. So that's just kind of like giving you my mindset when I'm looking at a swing trade, and I'm building my thing. You guys do anything similar to that, or?
Using the support and resistance lines, definitely. I don't go out usually to the monthly, the max. I usually go out as weekly. But I might start using that. I'm definitely stealing these colors from you though.
Yeah, go ahead, man. Like there's no trademark on it. Like you're gonna, it's crazy because sometimes you'll see, like, you know what, when I look at the weekly pivot points, like you'll see multiple times that those weekly pivot points are way stronger than the monthly or way stronger than the daily. It's just weird, you know, like all right. Okay, so here again, the trend line, like we built here, cracked it for a second, but then went down here, and then you see kind of like here. Look, I would like to see. I like this right here, right? I see this. It tested this trend line, tested this trend line. It was still indecisive. Closed down here, tested it. Now I see this. This is a thin body, went up here, but it's above the trend line. I'm saying, okay, this is looking good. I want confirmation. Then the next day, get this big green candle. That's just more confirmation, right? So you may want to enter here once you see this kind of confirmation. Again, this is just more practice understanding the trend line. I like to see it tap, for me, a minimum 2 to 3 times. So it tapped here, tapped here, tapped here, tapped here, tapped here. This is the trend line. Once this breaks, you got to get out and start taking some profit.
Yeah, I think trend lines are just so much more powerful, important than candlesticks, like what an individual candlestick is doing.
No problem, Jose. Yeah, absolutely, for sure. For me, it's a confluence is my biggest thing. I like multiple things to decide. Okay, you know what, this is looking good. And I also look at volume. Okay, there's more volume coming in this day. It's all confirmation. So support as the price level area or zone where we expect an increased demand from buyers. So like we talked about, right? If we look at, hold on. 1 second. Hey, what's going on, man?
Hey, dude, how are you?
Good. Thanks for coming on. We were just doing a slide. We were talking about support and resistance. I'm just going to give you a heads up, let you know what we're doing here, and then introduce you and talk and introduce you to our panel. So what I did here on my channel, I kind of did like a 15 chapter detailed course on in trading, and we're going through everything a day trader or a swing trader needs to know to become successful. It's a free course. And we got special guests. We got panel. We got Sean from We Are Investing. He has a great YouTube channel. We got Malik from NAR Trader, big time day trader. But we're also talking about we're also going to be talking about NFTs and options. I got Tom Nash coming on another video to talk about fundamental analysis, quantitative versus qualitative kind of like fundamentals, and just the overall exposure to the stock market. So I saw you have an active Instagram. And you have like a great content on your Instagram, and you bring on like let's see, a lot of people that have to do with investing and day traders. I've seen you have day traders on and different people that kind of
CPA.
yeah.
There you go.
So we wanted to kind of bring you on here and just oh, he's on.
He's buffering.
I think he's at cafe Wi-Fi. I think it's
he's at a brewery. His Wi-Fi is drunk right now.
All right. We'll wait till Malik is okay. We'll see if they come back on if their internet gets better. So we're talking about support at the price where area. So you look at, for example, past areas where a stock was bought. That area becomes support, and that's an area that's important. Resistance as the price level area or zone where expect increased supply from sellers. So when you look at a resistance point, you can expect that a lot of people are going to sell their stock there. So you may want to also kind of like take your profit at that point if you're holding a trend. Yeah, hold on.
We have a mutual connection on LinkedIn with Steven, business broker.
All right. He just texted me telling me he's going to try to get back on. Okay. So that's support and resistance. What I just did with XMI, that's an exact example of support and resistance. When I was building out the XMI chart, let's see the XMI chart. Yeah. So what I did here, right? Like I chose when I put this green line here, I said, okay, it tapped here, it tapped here, it tapped here, below it, and went back up, tapped here, below it, back up. So this is an area of support. Like for some reason, whenever it gets to this area here, 2,943, 42 area, a lot of people come in and buy it. So I would say, okay, this is an area of support. Same thing happened here. It tapped a few times, and you go back, it tapped it a few times. This is an area of support. So like I said here, like when I was talking about where I would get in, you know, if it ever like kind of got into this point in here, I would really be interested because there's a support. Like this is the monthly view. It pivoted here a bunch of times. Then this purple line is a trend. So all those things would add to my thesis of getting in. No problem, man. All right, let's see. Hopefully we get snapback back on in a little bit. Okay, here we go.
Sweet.
Hey, can you hear me?
I can hear you. Yes. Hopefully
Okay,
you
cool.
were breaking up super bad last time. I'm leaving my camera off, so maybe it'll work a little bit better here. But let's see.
All right, yeah. So I don't know how much you caught last time. It's basically we're just doing, you know, kind of just offering this for anybody that's interested in getting some exposure to trading and investing. We're doing like a full course. It's usually a course that they sell online for thousands of dollars, but we're doing it for free. We're just trying to share the knowledge, and we got a bunch of people joining, kind of supporting, and we're glad that you're on so we can ask you our taxing questions. Hey, Steven, did you catch me?
I'm sorry. You're breaking up pretty.
Okay. Let me know if you can hear me any better now.
Let me try to turn off my camera. Stop cam. Ah, he left.
All right.
When he comes back on, I'll do it.
Okay.
Kill some of the broadband or Broadway, whatever it's called.
Okay, so this is kind of like another example of support and resistance, right? So you have resistance tapped here, and this is support. So this is just going to help you if you want to learn where to enter. So like you may enter in here and sell in this part, but this is all a part of your thesis. Okay. Let me just finish texting with him.
Yeah. Hey, I'm going to go grab a drink real quick. I'll be back in a minute.
Okay. All right. So snap. So snapback CPA, he's at a bad spot. He said he's going to come on next week. So we'll just finish the slide and then call it a day. Okay. So again, how to find support and resistance. Like I mentioned, I like having multiple areas, right? Not just one. So you see here, it tapped it here. It kind of got close to it here, kind of got close here, tapped it here, tapped it here. So this would be like an area of interest. So like down the line, if I wanted to jump into this stock, this is Amazon, I would look for it to get into one of these areas of support. And that would help me build my thesis to get in and, you know, buy some calls or buy some shares and hold it until it starts hitting the resistance area. All right. So we got here. Again, just some more examples hitting it home. Support and resistance is so important. And we can do it with another stock ticker just to show you, but it's very important you understand how to draw out support, how to draw out the trend. If you're going to be a successful day trader and swing trader, you have to know how to do this. It's super essential to know how to point out support and resistance. And some more examples. So, right, we did the trend line on the up. You see it's green. It bounced. B1 bounced here. B2 it bounced here. B3 bounced here. B4 bounced here. The trend is solid on this, right? If you're in this, you want to ride this until this proves you that it's not holding anymore. And the same is true if you have a put or if you have a shorting position. It's on a trend downwards, right? And you want to hold on until that trend breaks, right? Is that what you guys do? You guys kind of hold the support and resistance and trends and stuff?
I'm jumping in the middle of your conversation, but the trend lines.
Yeah. How important is trend lines for you?
They're super important for swing trades and also for long-term investments as well, trying to identify potential reversal points.
Absolutely. So again, so this is what we were talking about, where this is support and this is resistance, right? Support, resistance, support, resistance. But once it breaks it, a positive sign that it's going to continue uptrend when this previous support, you see here, I mean, previous resistance, right? You see here, it was resistance, now becomes support. And Sean kind of, Sean touched on this before, and this is very important to me. Like if a stock breaks resistance, like right here, it broke this resistance, and then it came back and tested it. If that resistance becomes support, then that's going to be a strong support area. And that's something you want to hold on. And it may, continue to uptrend because of that. You touched on that, right, Sean?
Yeah, I did. Prior resistance becomes future support. And we talked a lot about trend lines. And one trend line that I think a lot of people forget about is you can have a trend line where you're just consolidating. So you have an upper and lower trend that's just sideways. You can make money during periods of consolidation. For instance, right here, you have a double top. You're bouncing off of the prior resistance. That gap there between the new resistance and the new support, that's a good range where you can get into swing trades. I don't know what the candles are here, if they're days or 15 minutes, hours, but
yeah, these are daily. But yeah, there's so many ways to make money on the market. Let's say you own some sort of equity, you have some ownership in whatever shares, and you know that this stock just trends sideways, right? Like Sean was saying, it just kind of goes in a channel. You can maybe buy some covered calls, right, and make some money off of covered calls because you know there's not going to be any extreme movements, and you own the stock. So that may be a strategy that you're interested in. There's just ways to make money.
Speaking my language now.
There you go. Key points to drawing support and resistance. Daily chart, zoom out, adjust the levels that tap the most. For day traders, know that there's natural resistance points like 50 cents, whole dollars, stocks breaking $1, $3, $5, $10. This is something that, we'll talk about more in advanced day trading stuff. But, that's just natural resistance and support. So a stock that's under 90 cents, for example, if you trade those types of stocks, know that $1 is going to be super, super hard resistance. And if it gets to $2 and something, know that $3 just naturally is going to be super hard resistance. For some reason, people like taking their profits at that point or like buying it up if it bounces down to that area. So understanding your stop losses and your profit is so important if you're day trading or swing trading. And if you're new, you have to have a plan. If you just go in and just close your eyes and pray, hoping that it goes up, that's not a plan. You have, once you enter the stock, right? Let's say you enter this stock here because it broke this. You entered it here, right? You entered here because it broke this resistance, and you got in. If it fails and it goes down, you should get out at the bottom of this candle. And your profit, whatever it is, some people do 1 to 2, 2 to 1, 2 to 2. What are your strategies for profit if you're going to swing trade? Profit to stop loss. Like, how much are you willing to lose to make? Sean, Malik?
I'm a little bit longer, so 520.
520. Okay. And what about you, Malik? If you're in a stock, how much are you willing to lose to try to make? Are you like trying to lose $1 to make $3, $1 to make $2? What's your strategy, Malik?
My high probability, I like to only take high probability trades unless I'm scalping. But I mean, it'd be like a 1 to 10 ratio if I'm doing a swing, or else I'm not taking it, right? Like there has to be a 1 to 10 chance, like it's gonna do that, right? But depends exactly what position is, a scalp, a swing trade, if it's just a day trade, right? So if I'm trying to put a stop loss, normally my stop loss would be a dollar below, and I'd be looking to make anywhere to $5 to $7 on that position if it was a day trade. So I'll probably take the position. Let's say it bounced off the low of day.
Yeah,
right.
And you know
off the low of day, like we see here, right? Bounced off. Go ahead.
Oh no, go ahead. I'm sorry, I thought you were done.
Okay, so when I see the bounce off low of day, let's say the second, you know how it almost touched the green part, but the red part, but it didn't. The first time it kind of went below it a little. So I would take my entry on that big green candle after that. So I'd see that buyer stepped in, and I'd put my stop loss where the low of that red wick is. So it's not really on.
You talking about this one?
Yes, exactly. So that's where my stop loss would be. It wouldn't even be on the point below, but my entry, I'm saying, would be like if you move the mouse to the right, where there's the green big square that says channel. Yeah. So my entry would be right there, that green candle right there. I'd take, well, it's blue here. I'd take my position there, right? And my stop loss would be below. And yes, I would have to have a lot of room for upside for me to even open the position, or else it would just make no sense.
Yeah, so that strategy is very helpful, right? If you're like positive that a stock has the potential to move $5, right? And you're risking $1. So let's think of that mathematically, right? Like let's say you take 10 trades and you're wrong 50% of the time, right? So that means you lost $5 and you're right just one, you lost 5 trades in a row, and then the 6th trade you're successful and you make your $5 target. Now you're break even after losing 5 times in a row. So that shows you how much room you have when you get into a trade and you have enough room to make $5, but you have a tight stop loss like $1. You can really like hey, what's up, Rich? What's going on? You can really almost be wrong like 70% of the time, right? Let's say out of 10 trades, you're wrong 7 times, you're down $7. And then the next 3 trades, you're right, that's $15. So you still made $8 profit, for example. And this is just like easy numbers to remember. So if you yeah. So
I see what you're saying though, but like I know, but just like I know a lot of people here would probably not be following you, like because it's like too confusing. Putting like very simple. If you made 100 trades, 60 of them you. You hear me?
No, you were breaking up.
So out of those, okay. So out of
I think we lost you, Malik.
I think he was just saying, and you mentioned it, like he's basically saying if you're if out of 100 trades, 60% of them don't go right, but you have a couple of trades where you have that nice profit margin, you'll make up for it and more. So you have room to be wrong. You're never going to be right all of the time. No trader is right all of the time. Every trader has bad calls. Every trader has to cut losses. The number one rule and one of the top trading commandments is never turn a trade into an investment. So don't just continue to hold that bag. That's why you have these stop losses set when you're trading.
Absolutely. Hey, Malik, you able to, you're clear now?
Yeah, I'm back. Sorry about that.
Okay. So
so basically the $60 every time you took a $1 loss on those 60 trades, you cut it, right? You minimize your losses. This is what the game is about. It's about minimizing your losses so they're not affecting your portfolio while maximizing your profits, right? So minimizing losses, maximizing profits. Either you're taking a big win, a small win, a break even, or a small loss. So if you're taking any of those, if whatever big loss you take, that could take from your profits, from the percentage that you were making. Let's say you made 100%. If you let a stop loss go below, what you were willing, now that's kind of changing your headspace, changing your game, changing your plan, and then you have to change your plan as well. So what I say is always stick to the plan that you made before the trade, because that's when you made it with no emotion. Now that you have money in the position, hope starts to come in, fear starts to come in, and that's where stop losses have to be cut quick, because if they don't, then it breaks your stop loss, and you're in a position where, damn, what do I do now? I don't want to let it go, so it's really all psychological at that point.
Yeah, absolutely. Great point. So this is again to reiterate what we were saying. The support area, support, it broke it, and now this support area became resistance. And this is what we're talking about here, like a nice little trend channel. We know that it's on an uptrend, and this is where it's kind of bouncing off of, and it's not breaking this resistance area. So this is kind of like good to know if you're in this stock, you want to hold on until this breaks, right? Either to the downside, to take your profit, or to the upside to confirm that, hey, it's still on an uptrend. Indicators. So indicators are mathematical calculations which are plotted as lines on prices and can help traders identify certain signals, trends within the market. A leading indicator is a forecast signal that predicts future price movement, while a lagging indicator looks at the past trends and indicates momentum. What are some indicators that you guys use?
Excuse me?
What kind of indicators do you guys use in your trading?
I use stochastic, slow, and average volume. Other than that, and VWAP. Other
VWAP,
than that,
okay.
Everything is kind of lagging, and it shows me late what happens after the move happened, right? Did you notice that? They're called lagging indicators.
Yeah.
So,
and what
like VWAP, that's what the hedge funds use.
For sure. VWAP is very well respected and known. What about you, Sean?
I have VWAP just for the daily or the 1 minute, 1 day, 1 minute chart. Then I also use RSI, MACD. I look at the average volume. And then one other thing that I use, because I do a lot of options trading, is I have a custom study that's IV rank. Basically tells me the IV percentile, implied volatility. So the higher the number, the better. For instance, if the IV percentile is 90%, and it only works on the 1 year, 1 day, then that is telling me that 90% of the days implied volatility was lower. So as an option seller, I'm selling when implied volatility is high and premiums are high, so that I'm making the most money by selling options. Because a lot of what I do is I buy long-term options, I buy leaps, but then I sell shorter-term calls against them. It's called poor man's covered call. And I love being able to sell when implied volatility and premiums are up. So that's another study that I use.
Excellent. So there's two types of indicators. There's the overlay, and that's the one that go like on your charts. Those are the moving averages, the Fibonacci lines, the Bollinger Bands. And then the independent indicators or oscillators are the ones that you see like on the bottom, where that's the MACD, RSI, money flow index. So here we have like overlay indicators. You see that they're actually on the chart, and with the independent indicators you see on the bottom. Moving averages. So here we have like the 200, right? And the 200 really just helps you decide and let you know where the trend is. So if for example the candles are like below the 200, then more than likely the trend is downwards, and it's going to be downwards for a little bit, right? So you see here, you see this is the red line, they're all below the 200. But at this point, it broke above the 200. And for some traders, they like to see crosses. So crosses of moving averages. So like maybe the 200 and the 50-day moving average, they cross each other. It may indicate a crossover that it's on an uptrend. So for me, like if I see this crossover along with a bunch of other things, it may want to get in and jump in, because you see the crossover, and then maybe you see an uptrend on the RSI. Maybe you see it's breaking a previous support, it's breaking a previous resistance. So all those things, that this is some strategies. Do you guys do any crossover moving averages? Not all. It's not every trader does, but some do.
Yeah, I do. Like if you're talking about like death cross or golden cross, did you hear of those? Like, do you use those?
Yeah.
Where
Yep.
like the 180 SMA, right? And then we have the 90 EMA coming from the bottom, crossing it. We have buyers and sellers wherever these lines meet. So let's say the 90 EMA is buyers, and they're waiting for like a 180 EMA, SMA, pull up, and right when you see it touch the moving average, you notice a spike of volume. Right, whether it's computers or people think that the value of the stock is moving up, and finally, because it's above the 180 SMA, that the value of it is growing, and it's actually like a positive total value. That's when people start buying up the stock. So if you go on a long-term chart and you put the 9 EMA, the 180 SMA, you'll literally notice whenever those spikes happening. Sometimes we'd have a gap up called a breakaway gap. Things like that. So yeah.
Yep. What about you, Sean? Any crossovers for you or anything?
To be honest, no, I don't really use crossovers on the moving averages. I just look for longer term supports off of the 200-day or 150-day.
Okay, excellent.
I use them both together. So if you use the cross move averages and you find the supports and resistance, you can really find a great trade. You know what I'm saying? Because each of them have their own different buyers and sellers. So let's say all of the buyers on different moving averages and different price levels are meeting up at one point, and you're building this hypothesis, like the volume. This is where volume steps in. This is where buyers step in. This is where the 180 SMA is. This is where it has potential. So like building that hypothesis really gives you a solid probability.
For sure. Like this is something I'm going to consider and pay more attention to in my charts and see how it works. I haven't used it before, so I don't know how good it is, but I'm definitely going to keep an eye on it.
Yeah, we should all have like a sort of Sunday watch list. I'll invite you to my group chat tomorrow at like 8 p.m. if you're free. We could just observe stocks together, see your point of view on it, my point of view on it, and if it's the same, that's kind of where I see the best trades happen, when like 3 or 4 of my admins agree with me, and they see different things and they're pointing out different things to me. Like it's great to have a community to kind of build a hypothesis with.
Yeah, 100%. Yeah, reach out to me.
Sounds good.
You can reach out. We'll figure out how to. Once the video's over, we'll talk offline.
Yeah, so some of the best moving averages for day traders, VWAP for sure, many day traders, and each day trader is different. So some guys during the daily intraday charts, they use 9, 10, or 13. Those are pretty popular. They're extreme fast moving. Some people use the 20, 21, and they're midterm, good for writing trends. Some people use the 50. Understanding this, I put this about self-fulfilling prophecy. Just know that these indicators, they're considered really self-fulfilling prophecies, right? It's not like there's a rule that once it touches this moving average, that it has to reverse on that. It has to bounce or stay on that. It's going to happen because a lot of people are going to see it and they're going to buy in those areas. So if the overall market is bearish and nobody's buying and everybody's selling because they're scared of war, and I got my boy Investory, excellent day trader, excellent swing trader, overall very knowledgeable person in the market. Shout out to Investory. So if the overall market is down and like I said, everybody's worried about the war and what's going to happen, then maybe these support lines might not hold, right? Because the overall sentiment is bearish anyway. So just understand that it's not like automatic once you have these moving averages that they're automatically going to sell and work. Here we have some people like the 9 and the 20, best potential in the morning, right? You see kind of like the trend of the it's kind of like bouncing off of that area, and there's different styles for everybody. Some people here like to do the 10 and the 20, and they make like a zone out of it, right? So here, like you have the crossover of the 10 and 20. that means it's going to go on a downtrend for some people. And then it's in the zone and it's going to continue. This is an area where you want to hold and you want to make sure it don't break the zone. And if down here they cross back the other way, now you see the blue cross above the 10, cross above the 20, it may indicate a reversal to the upside. And I'm not saying these are strategies that I do. I just want to kind of like introduce you to some mentalities, different strategies that people do. At the end of the day, you have to find a strategy that you're comfortable with and that's easy for you to identify. Overlay indicators, the most common are the 20, the 21 moving average, the 50, the 100, and the 200. And some people use the 250. The 200 to me is extremely popular. It usually helps you decide which way the trend is. And some people use the 250. Just know that you have to use the ones that are popular, right? Like the 200 is pretty popular. If some guy comes up to you and says, hey, I'm going to sell you a special indicator, it's the 375 EMA, right? You know, like don't buy it, because if nobody's using it, then you're going to be the only fool buying it on when it taps the 375 moving average, right? So like just some people talk about they have like a secret sauce and a secret this. There's no secrets in day trading. There's no secret, nothing, right? It's wherever it's the 200 is popular because a lot of people look at it. A lot of people respect it. So if you see that the stock is trading below the 200, then just know more than likely that stock is in a downtrend and it's going to stay in a downtrend, you know? So don't be fooled for people. You know, there's a lot of fake gurus out there that try to sell you a fake stuff. Just be careful with that stuff. I actually had somebody DM me the other day. They said that I don't remember the company that was selling it, but it says that we have a special whatever indicator and it's 97% accurate, right? I was like, come on, 97% accurate. So he asked me if I could look into it before he bought it. And I looked into it and it was 97% accurate because when they set a trade, their profit target is, let's say, $1 and their potential loss, they set it at 100. You know what I'm saying? Like, so like if you back test that, like I could back test anything. And if I back test it and I put like an indicator that take profit at $1, but take loss at $100, bro, I can make anything look like 97%. You know,
Well,
we can make up anything.
Yeah, but he's not wrong. It's 97% accurate if you want to lose money.
Yeah, absolutely.
Yo.
So I found that and I said, bro, don't do it, you know, because you're gonna lose money guaranteed, like not even like possible, you know. But you know that's what they do. They back test, and if you put that, you know, you can back test anything. Like I back test stuff, but I mean, obviously, I'm not going to put that I'm going to take a loss at $100 and a gain at $1, because then that's just false. You know what I mean? But yeah, they were charging a lot for that, you know, and you just have to be careful for that stuff. So again, like look at the 200 is respected, right? You see, it's not breaking above it, it's below it, it's on a downtrend. As soon as it breaks it, and then it's the stock is trading above it, it's on a possible uptrend now.
That's going to happen for a lot of stocks. I feel like once we start getting like, you know, the market right now is in a downtrend, and we're below the 200-day moving average on so many stocks.
Yeah,
that's something that people should keep an eye on. See if we can actually start breaking trend.
Yeah,
because the market's been selling off.
Yeah, and if you want to test it, right? Like the good thing is, like, start looking at what we're showing you here and testing it with no money. Testing it just to look. Maybe I used to, like, my first month, I would just like not even take trades and write in a journal. I'm testing the 250-day moving average. Okay, over here I saw it cross. My entry is $300. I'm holding it to see if I'm going to be profitable, right? And it, you know, and I was profitable. I was right. And do that multiple times. If you're correct, you know, and you find something that you can practice on and you can identify it easily and you're comfortable with it, then eventually after that, then start paper trading. Then use real money, but just take small positions until you're comfortable.
Mm-hmm.
So VWAP is probably one of the most highly respected indicators in intraday trading. I really don't know anybody. I mean, there's rarely you meet anyone that does not use the VWAP in day trading. I mean, Sean, do you use the VWAP? Malik, you guys use VWAP?
Yeah, I got VWAP on there, but I don't use the upper and lower bands. Like I only use the middle one.
Same here.
Yeah,
Same
that's
here.
the one hedge funds use. They use the middle one.
I only use the middle band too. So the VWAP is a trading benchmark used by traders that gives the average price a security has traded out throughout the day based on both volume and price. It is important because it provides traders with insight into both the trend and value of security. So VWAP formula is total dollars amount transacted divided by the total shares or contracts traded for the day. And we got Investory. He uses it. Everybody uses VWAP. So some people like they'll build a strategy around the VWAP bounce, right? A stock flushes and it taps the VWAP. The day trader buys it, maybe the scalper, whatever they look for a quick reversal or the break of the VWAP. There's different strategies just around the VWAP itself.
Yeah, and you said it, but I just want to put emphasis on what you said. It's only intraday. You're not using VWAP for longer term stuff. It's only for the 1 day, 1 minute chart. Like you're not using this for the last 10 days or whatever.
Yeah, the last like longer things, you're going to use EMAs and moving averages and stuff like that. VWAP is intraday. So here we have, look at this, these line here. This is the VWAP and this is intraday. You see it kind of like respected it. It broke it and then it broke above it. So this is just kind of an example of some VWAP usages. So here, for example, we have it's breaking above the VWAP. Here's resistance. So this may be an area of interest, right? They jump in here and exit during resistance. And then you see it bounces below the VWAP, then above, bounces below and above. Bearish attempts to push the market away from the VWAP, but failed. So the VWAP is pretty much involved in everything intraday.
It's essentially like a way to gauge sentiment in intraday. It's like the way you look at the 200-day moving average. You basically look at VWAP the same way. Like when it's above and it keeps on testing VWAP but holding above that middle band, you remain bullish. Once it starts breaking down, then you convert over to bearish. That's all it is.
Why is it only usable intraday for day or minute?
Good question. I just know it is.
You know why? Yeah, it has to do with the formula. So the way the formula is calculated, right? So it's the total amounts transacted divided by the total shares of contracted traded for the day. It's specifically made for what is traded within the day versus the total amounts traded. So long term, right? It's going to be you can put the VWAP on a long term thing, but the data is going to be off, right? Because it's calculating way too much data. You're supposed to only use it for what is traded within a day, right? It's like a calculator, and it calculates all these transactions that are traded within the day and the dollar amount connected to them. And if you plant it on a daily chart, it's going to calculate all that, but it's giving you false information, right? Because it's supposed to translate all that information into what's going on within the day. So that's why it's a formula that, like I said, it's not like it's not going to work on the long one, but it's just false information. So when you actually apply it to the daily, it's calculating all the contracts traded on that day with the dollar amount, and it's giving you information for that day. And that's when it's most effective. And that's what it was essentially created for. It was created for data within a day. So Bollinger Bands are some people are going to use Bollinger Bands. I don't use Bollinger Bands, but they're technical indicators developed by John Bollinger in the 1980s that plot the standard deviation around the moving averages. Their envelopes plotted standard deviation level. Bollinger Bands help determine whether prices are high or low on a relative basis. Some people use this to identify trend pullbacks. You guys use Bollinger Bands?
I used to. It's just kind of market situations. When market situations change, the indicators that you're using change, and that happened to me with Bollinger Bands. Like at one point it was working, at one point it was well, and then it started being, choppy, laggy, and the market itself was becoming real choppy. So when the market is choppy, using those things aren't the best.
Yeah, I don't use them. There may be some people that use them. Investory don't use them. But if you are gonna practice, this is how it's kind of set. Like, so it bounced here on this lower band. Some people may buy here and hold on, and it breaks this middle EMA, and it's just confirmation. I don't know. I don't use it. I've never had good success with them. I've never really felt comfortable with them. They say as the band squeeze, you're riding the trends. So kind of like here is starting to get smaller. So it may be in like as it squeezed here, you see how the bands got smaller. It indicates a possible reversal in momentum, right? So it was most likely on an uptrend. And then this squeeze here, if the person that uses the Bollinger Bands says that, okay, this may mean that it's starting to reverse on the downtrend, and it did reverse on the downtrend. It's not for me, but I just wanted to expose you to it. So RSI is pretty popular. A lot of people use RSI. The relative strength index. It is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or an asset. The RSI is displayed as an oscillator, a line, and can have 0 to 100. So this is good for like long-term swing traders, right? They see that it's overbought here, right? It's above the 70%. And that may indicate that it's gonna go down after that because it's overbought, or if it dropped here too low, it's oversold, and people are going to start buying it now, right? So RSI is pretty popular. Do you guys use RSI?
I do. I personally use RSI. I use it a lot to help try to identify. So like with all these indicators, it's not just one thing. You're using multiple things, but this is one tool in my toolbox that I use to try to gain confidence or confirmation that a stock's moving in a certain direction. So I use it a lot on the oversold, and I actually have studies or scanners that I use, and I look for stocks that are oversold and overbought as potential swing trades. And also when you start getting a stock that is overbought, sometimes it could break out even higher. So as you approach that overbought on the RSI, like 70, you could get a real quick breakout, and it could be a nice little quick swing trade or day trade.
All right, got it. So Investory used it when he was younger. I have him like I do use them sometimes. And I also have them, like you said, I have them on the scanner here. Like for example, so I have this scanner, strong fundamentals, right, where it's positive on EPS growth over the last 5 years, positive price to book growth, positive on net profit. I'm looking for like a strong fundamental stock that has everything positive. Return on equity is 20%. Sales over the past 5 years been positive. Price to cash flow, everything's positive. And then I'll put like RSI, I'll put like oversold, let's say 30. If it's not there, then I'll put 20.
You gotta go
40.
higher. Yeah.
So we have here oversold 40. So then I'll look real quick. We have oversold. So then I looked at like Ecom, for example, right? So fundamentally, this is a very strong company. The price to cash flow is good. Their free cash flow is strong. They've been gaining revenue over the last year, but it's oversold. And then so this is actually a stock I did. I scanned this. I saw this. I said, okay, fundamentally, this is an excellent stock. And I did a DCF on it. And then I felt like, okay, once I did this, I was going to do a video on it, but then like as a value trap, right? Because it seemed like a great value play. And the DCF, if you just do the DCF according to the free cash flow, there it's undervalued. And that, that may be, the more I looked into it, I saw that they don't have a lot of strong potential growth revenue wise, right? So even though they're undervalued, I felt like it might be a value trap. So I didn't, I was going to make a video on what a value trap is. But that's just kind of like one example of scanner I do. The MACD. Any of you guys use the MACD?
My brother does. That's one of his. That and TTM Squeeze are his favorites.
Yeah. So the MACD.
Okay. Yeah, I use MACD and RSI. Those are the two that I use.
So MACD is a trend following momentum indicator that shows the relationship between two moving averages of a security. The MACD is calculated by subtracting the 26 period exponential moving average from the 12 period moving average. And some people use, like, for example, this is like it's on a down slope and it crossed over. So this is indicator to sell. It's on an up slope and, not buy yet. But once, like here, for example, it crosses over. Some people buy during the crossover. How do you use the MACD, Sean?
So what you have shown here, but also when it crosses over that middle line, you can also see like once you cross over there, you saw the stock gap up.
Yeah.
And go straight up. So the MACD can help gauge it's like I said, just another point like the RSI, but can also help try to determine sentiment and direction of a stock.
Got it. And I don't know if Investory uses MACD. All right, so key points: don't just depend on one indicator. Use multiple confirmations before you execute your trade. And that's it. Anybody have any questions or any stock they want to look at before we close up here?
Let's take a look at SPY.
Okay, let's look. Oh yeah, let's look at the SPY. Look here.
My name's right there. Right where we bounced.
Look at that. You called it right on the money.
And it was a lot sooner than I thought too.
So check this out. I'll fill you in, Sean. So Sean, when we did this video, it was like trading somewhere around here, right? Let me see what day it was.
Yeah, exactly.
Does that correspond to like a perfect like 15% drop, like peak to trough or something?
Oh no, so SPY, when it drops 10%, half of the time after that it drops 15%, and a quarter of that time from the high it drops 20%. So like I kind of it's about 15, I believe.
Yeah. That's a good call.
So yeah, Sean, check it out. So right here, this day was the last week we did a class. It was trading here 437, and NAR trade called it out. He said on 317, or it did it earlier, but he said it was going to bounce off the 410. So a week later, look at this. It really literally bounced perfectly on that 410 area.
Yeah.
So if you would have followed NAR and put like a buy signal or call here at 410, you're already up a lot. I mean, because now it's at 437. That would have been pretty much, you can't get any more of a perfectly executed trade on that.
Yeah, literally.
Yeah. Yo, you think 15 is gonna hold, or you think we're gonna go
So if we continue with all this war and sanctions grow to, putting troops in Ukraine from America, and China attacks Taiwan, America gets into that, we're definitely seeing 384. If you want to put my name down there too, you know what I'm saying?
is that the 20 peak to trough?
But it's all about us breaking the 441, I believe. If we break that, I think we're going to start uptrending. But, we'll see. Who knows?
You said where?
384.
As
300
the bearish.
Yeah,
and
that's a 20% drop from highs.
Yeah.
Oh, okay.
Which
So
is,
if war continues and all that, you think it's going to go down to 384?
Yeah, that's what he was saying. I don't know if he got lost connection. And then he was saying if we break, I think he said 441. He's going off of the what's it called, the resistance before that drop.
Got it. Right here.
No, up. Keep on going. Like what's that?
448.
Yeah, so I think that's I don't remember what he said. I think it was around there.
See it too well because it's really zoomed out. Let me zoom in and see my level. Where I'd expect a strong rejection. It would be your orange line.
The orange line? Okay.
What price level is your orange line at?
448. So if it rejects,
that, but if we see the lower side, we'll see 384. Yeah, that's kind of what we're expecting.
And that's gonna, like, you kind of have your trend line there a little bit too.
So we got, if it becomes bearish, you think it'll fall down to 384, especially if this 448 doesn't break, right? If it rejects the 448, it may come down.
Yeah, so what I expect is us to bounce between your lowest green line and that white downtrend line. and bounce and squeeze and descending triangle until around mid-March is where we'd actually get the bigger fall.
Okay. Well, so far he was
But yeah, I had an
pretty
article.
much dead on accurate on this one here.
Yeah, 410 and change.
You got a comment from Rich. Large movement in Rolls Royce. It probably has to do with plane motors.
Yeah, that they're gonna get contract. Is that the ticker RR? Yeah, right.
Nah,
It's not it, right? That's Rolls Royce.
I thought it was like he's got the ticker RR.L.
Oh, it doesn't pop up here.
No, that's not the ticker for Rolls Royce.
I thought it was like RRYC or something.
Is it this one here, right? Rolls Royce Holdings.
Yeah.
All right.
It's traded on the London Stock Exchange.
Yeah, this one's from the London stock. So yeah, they recently had some news. What do you think, Sean, about Rolls Royce?
For me to get into a position like this that is more tied toward like macroeconomics and what they can potentially do in a war situation, I have to do the research. So I wouldn't get into a trade unless I do that due diligence. Because like I'm just looking at the news and it's like Rolls Royce boss to leave with COVID recovery in sight. Like it looks like there's a change in management. So like I try to stay away from that stuff because when you get news that like the CEO's leaving or whatnot, technicals don't matter so much, at least not in the shorter term.
I remember when I got news on GameStop where they changed the CEO to the CEO of Chewy. GameStop was $33 before all the short squeeze stuff. That was good news.
Yeah.
When you see like 8K filings, you could like kind of go to the SEC website, see the new 8K filings, and if you were to go on the chart of those 8K filings, you'll see pumps, man. So that's like a good little strategy I like to use sometimes.
Yeah, and all the stocks that I'm invested in, I just sign up for like their email alerts whenever they have SEC filings, and I look for 8Ks, but I also look for Form 4s because when a CEO or upper management is buying stock, to me that is a huge signal that they have confidence. So I look for that stuff a lot, and I typically know what companies I'm looking at, and then I'll sign up for their email alerts just to try to keep track of it. But you can also go on some websites and look at insider trading.
Okay. So this is just quickly like without the news, if you were just like on a technical, obviously you have to mix technical with fundamental, but let's say you were just strictly focusing on technical and fundamentally this was solid. I would probably look for here to see if it's going to, break this kind of like little triangle and head upwards, and then see if it tests this monthly pivot. Or if it breaks here and maybe bounces. But this would be like an area where I would be looking to see if the uptrend is going to continue, because you see it bounced here, and I want to see if it can bounce here, break this little triangle wedge, and then head upwards, and then hopefully break this monthly. That would be my mindset from the technical. But also, you want to mix technical with fundamental and macro. You want to see what's going on with the war, if there's going to be more fear. You want to see what the news is with Rolls Royce. Is there anything positive or negative coming up? Are there earnings coming up? So you definitely want to mix kind of all that together.
Yeah, let's take a look at this chart.
Look at the short squeezes that are going on that.
Yeah, and the short interest on it.
Can you zoom out a little bit?
Yeah, no, I would not play this unless it breaks that middle point, neckline in the middle of the stock, like where it looks like a double top. Yeah, no, I wouldn't really touch this.
Yeah. Like
There's
right
a lot
here.
of a lot more volume in this lower part, though. I'm not gonna lie.
Yeah, you
I
can
mean,
see
see,
that.
that's what I'm saying. You see all this volume that came in here, right? And it's like bouncing. It seems like it's starting to move uptrend a little bit.
Yeah, it needs to keep making higher highs, and you could stay in the position. If you see it making a lower low, then a previous point, which is like a previous peak, that's kind of your choice, your point to exit the position. Other than that, if you were to take it with shares, just make sure it's breaking that upper point that it double topped at a couple days ago.
Like right here, this area.
Yeah, exactly.
Yeah, and I would take profits on that red line. Go that one. Yep.
Okay.
That prior supports your new resistance. It's a little bit early maybe because you might get to the level before the drop, but I'd rather take in profits there than wait.
Yeah.
So you kind of have to do what you did earlier, like look to see. All right, you got your red support. You got
Yes.
your where I was looking at to take profits. What's the risk to reward there?
Yeah. So like right now, I mean, like, yeah, like right now I wouldn't jump in it either. It's below a bunch of moving averages. You look at the stochastic and the RSI, it's on a downtrend. You see, it's kind of like downtrending.
Oh, use the stochastic slow too. Stochastic
Yeah.
is my indicator for it.
Yeah. So like right now, I wouldn't feel comfortable in this trade right now if I was going to swing it and not. If I don't know anything fundamentally, right? We just take that out fundamentally. But I see it's on a downtrend. I see it's kind of like going to test this area here. I don't know if it's going to hold. And it's kind of like if you look at any moving average, it's below the 180 here. It's below the 9 moving average, the 20 moving average, the 200 moving average. So it's below all these moving averages right now. Right now, it's below all the moving averages. It's on a downtrend on the stochastic. So if this breaks, right, if it gets here and it just goes downward, it's just going to tank even more. There's just too much pressure above it right now. It has to break above some moving averages. It has to keep this trend going up. It has to break this little triangle. I need to see like an uptrend on the stochastic and the RSI, and then I'll feel a little bit more comfortable. But I wouldn't jump in it.
And something else to add here, right? So you have your two trend lines and they're converging. That point of convergence is typically where you're going to see a move, like a relatively decent move. And I don't want to be in the stock as a trade before that move happens because it can turn south real quick. So you got to wait for confirmation. And that might be one point where you have it. At that point, you might be trending really, you might get oversold on the RSI, and then you might see a bounce, and then you might break the resistance of your white line and then start your trend upwards.
Yeah. Yeah, there you go. See?
100%.
So all these three are moving averages and they're all below it. And like I said, if we can break above it and then be above the moving averages, now we're having like a confluence of different probabilities in our favor. Yes, sir.
It's just not the environment right now where I would want to get into trades that I don't have where I have not done the fundamental research.
Yeah. And if there is a trade that you like I did a video a while ago on Foot Locker, I think, as a swing, but I talked about selling a put, right? Selling a put way way down here. And if you were positive, if you were like positive on the stock, like you wanted to own it anyways, and you had like a really, really low price on it where you were selling the put on a low price and it gets executed, now you're into the stock that you wanted to get into at the price you wanted to get into, and you own that stock. But let's say it reverses and it goes up, or it kind of just consolidates, then you at least just keep the premium.
Yeah, for sure. Selling cash secure puts is a good way. A put up Roku real quick, or you can go to Nike. You can do what you're doing to Nike, and then we'll do that next. So if you're what's this, 1 day, 1 year, 1 day?
The stock is gone, bro.
Yeah. So is this the 1 year, 1 day, or are you more than 1 year?
This is the
It's on the daily. Yeah.
On the daily. Yeah.
You can't really do
this is,
it's just like daily candles, because I'm trading view, it's
here
different. This one.
Okay. So this stock had earnings, right? And it tanked.
Yeah.
after the tank on earnings, what I did was I got into a put credit spread. I basically put my put credit spread, which is basically I wasn't bullish on the stock, but I wasn't bearish either. I thought it was going to hold the 52-week low at least for the next couple of days after earnings, and you saw that big flush out. I got into it. The stock moved up a little bit on the day after, and then on that Friday, which I think is that big red candle that's after earnings, it dropped like 9% on a day off of no news. That's the kind of environment that we're in right now.
Yeah.
Especially, because this stock has no guidance.
Yeah.
I don't know if you listened to their earning call, but it literally sounds so amateur and like it was made by 14-year-olds, and they don't have any plan or guidance for their business. Their business model is basically burned. Google and Amazon ripped them, put them in, their own TVs, Samsung, you know what I'm saying? So where are the Roku TVs really? And TCL, which is like a very bad company, So I don't know, man.
I don't like the stock. It was a trade. I thought it was going to hold above the 52-week low a day or two after earnings for the next like 2 days. And it was just a 9% drop on that Friday.
Yeah,
Off of no news. If you look at like the 5-day or something like after earning, or you can go to like the 10-day. And you go 5-day. You're not going to see earnings because they were last week. This trade happened last week. So I don't use TradingView.
Yeah, neither do I. Use Thinkorswim, right?
Yeah.
That's really where it's at, my guy.
Yeah, I have Thinkorswim too.
It's like it's more. It's
earnings were
like
right here. Earnings were right here. Yeah, right here.
Yes.
So we had earnings after hours, and it went from 160 all the way to 102.
That's embarrassing. That stock was 450 like 6 months ago.
I'm getting my stocks confused. This one actually was fine. It was Roblox that did it.
Roblox.
Yeah.
Roblox.
Oh, there we go. Here. So earnings 74 dropped to 54.
Yeah, and that's the 52, like close to the 52-week low, I think.
And would you say you sold a credit spread?
Yeah, I sold a put credit spread.
Oh, nice.
Oh yeah, the 52 is right here.
Yeah, so I sold it when it bounced the credit spread, thinking, all right, you're gonna hold above that, and then you can see on that Friday,
it crashed below.
Yeah, it just took off of no news. I thought, we had earnings out of the way. Good chance now that stock's bit me in the ass. That trade.
Yeah, it happens.
Yeah.
All right. Any other comments, questions, tickers before we get going, guys? Anybody
Did
in the chat?
Did you check my article out though?
Your article? Where's that at?
It's like on.
Let me see. Hold on, real quick here. It's on your Discord.
I'm gonna type it in the chat, the link.
Okay.
I don't think I sent it to my members. No, but it's in the private chat between us here, not on Discord, on the stream. I don't know if you see it. Check that out. Check that out. No, the private chat on the stream no, not the Discord, the stream.
Oh, yeah, on Streamlab.
Yeah, on StreamYard.
Oh, okay.
Like we have a private chat there.
Oh, got it. I got it. Okay, I see what you're saying. Never give up attitude and consistency are the key to success and freedom. Check this. Let me post copy
There's a lot of
address.
views on that.
All right. I just posted the link in the chat. You guys want to check out this article? All right, fellas. So
sure.
Thank you for
But,
joining
yeah.
me. If there's no more questions,
I want to
anything.
get
Oh, you
your
got some.
investing.
Oh, go ahead.
What's up?
I just want his Instagram or something just to give him a follow. What's your gram?
Yeah, you can. I'm not really on Gram too much. That's my personal thing. You can follow me on YouTube, and you can follow me on Twitter.
Oh, okay.
So Sean,
All
we
right.
are investing on YouTube, and then S7 Pence on Twitter. Let me.
S7.
We'll talk. Yeah, S7 Pence.
Nice.
I got
Gotcha.
a link to his YouTube channel here for Sean We Investing. Give him a follow.
For sure. Yo, and also make sure you hit that like button on this video and subscribe to this channel if you haven't already.
There you go. This guy got the best intro music. He got the Cuban roots. I was gonna have to get like some Mark Anthony or something.
Yeah. I don't think you can hear it. You probably got your I can hear it.
Oh, I mean, yeah, I probably can't hear it.
Yeah.
I do want to hear
sure.
that intro. I'll check out your page, my brother. I'll give you a subscribe.
Nice. I appreciate it.
Sure.
All right, guys. So next week, hopefully, we'll have a CPA. Try again for him. He's in a bad internet location. He'll be on next week, and I'll announce any more other guests. All right, guys. Thank you for joining. See you guys next week, and thank you to our guests, Sean and Malik. Please give them a follow and a like. Appreciate you, and see you guys next week.
Yep.
Have a great day, guys.
See you.
Bye.